What's up, guys? In this video, I'm going to go over the outlook for ES and NQ going into the end of the year, where we came from, and where I think we're going to go. So if you look at this, delete that. If you look at what we have on the screen here, we have the daily chart on ES, and it's going to be pretty much the same for NQ. Again, these are the two biggest indices, so their general direction is in the same direction. And what I have here is the market maker sell model that I believe we've been in for really the whole year. If you know the market maker sell model, if you don't know the market maker sell model, I will put a link in the video to ICT's latest teaching, and I also suggest you go to his YouTube channel and watch the Market Maker Primer series. But down here we have the original accumulation, and then I just highlight the stages. We have the higher time frame point of interest, and it's not showing up on this contract because it was so long ago, but as you can see, we have the previous highs made during the COVID era. If you can see just the spottiness. So we turned around, and what I'm going to use, what I'm specifically want you to think about, and what I will be thinking about, is how we just ended this quarterly shift, and it ended taking the sell side along under this original accumulation. So what does that mean? Well, I would suggest you also go watch his quarterly shift video. I believe it's the first video of month 5 in the core concepts. You can watch that video even if you don't have a really strong understanding of ICT's concepts. I believe that whole month he builds off of that video, but it is the first video of the month, so you can watch it as a standalone video. And what he kind of breaks down is how the algorithm, and he shows you how to get these levels, but the algorithm, and when you enter a new quarterly shift, you have to measure in increments of 20 days. So these lines are 20, 40 days projection, and what we do is we look back 20, 40, 60 days in the past, and we highlight the highs, or if it was inverse, the lows, and we use that to get institutional levels of liquidity. So as you can see, after we finished last week and we reached finally under that sell side, this was the first daily candle to take that sell side. We opened this week, and boom, we have a large run up. Now, I mean, this is what I think is amazing about smart money concepts and how ICT teaches them, is this run would look random if you weren't putting it in the context of what I have on my chart right now. This would look random. But it's not, and it happened perfectly. So what we have to do is, where is the next quarterly shift target? So it's easy to get caught up in thinking we got to go lower, because even if you get the continuous contract, we have a lot of lows down here. With where the economy's at right now and what's going on in the Middle East, there are some people that are saying recession might still be likely, more downside might be likely. But then you also have people kind of talking about, usually the stock market rallies into the end of the year, and they call it the Santa Claus rally. Well, I think that times up perfectly with ICT's interpretation of the algorithm, even though, we don't trade fundamentals or, sentiment. But so I say all that to say that what you need to do is expect price to do something in these intervals. So in the first 20 days, I'm expecting us to take some kind of buy side liquidity, because as you've seen, we delivered buy side of the curve and then sell side of the curve. and I think it's kind of due for us to take some buy side if we do want to go lower. The question is, how high is it going to go to take that buy side? We have this little swing high right here, but as you can see today, we blew through that. So the levels I'm watching, after that are this daily for value gap. I want to see, I think we already closed the trading day. So we closed above it. So I'm going to be watching to see, does the rest of the week treat this like an inversion where we open up above it, come down, and go higher? If that happens, I think this high might be in store. Again, this is we're framing this on the daily to kind of get a roadmap on what to expect for the next quarterly shift. So the next 3 to 4 months, I guess in this case, like 3, what's going to, bring us into the end of the year. So I want to see how we respect this daily fair value gap. I will then be watching this up close candle and see if there's any kind of order block in here, maybe on the 4 or the 1 hour, but these highs. And again, if you look 20 days, we have a decent amount of time, and we already covered so much. We're about halfway there. These highs aren't, they're not too far away. So I will be watching these highs, and then I want to see how we treat those highs. So then, frame the 40-day perspective. So do we take these highs and kind of turtle soup them, like wick above them and then go lower? Or do we blow through these highs, close above them strongly, and show a willingness to want to go higher for more buy side liquidity? I think so. The next quarterly shift is probably it should happen in about 60 days when we do 60-day intervals. So it's going to bring us into about third week of January. I think what it could look like is a lot like this. I know it's a little spotty because the contract doesn't go back that far, but see how this quarterly shift, it was just kind of this V. It was more of a consolidation. It was like up, down, original accumulation. So we could very well see a quarterly range that is just, between this low and say between this high. And, we could come up, wick above these highs, and then end somewhere around here. But again, just keep thinking in this 20, 40, 60-day time frame and mapping out the daily liquidity levels. So again, like I said, if we close above this fair value gap and I see us target it or use it as support, and just know, like on the lower time frames, it doesn't look like a lot from here, but if we do use this daily as support, that's a lot of room where we can, a lot of handles where we can be profiting off of, daily ranges. If we say open the next 2 days of this week and we go lower and we kind of show respect to this daily fair value gap, again, with so much happening in the Middle East, the dollar could really show a willingness to go higher and, lower indice prices. Even though the dollar did gap down and have a very big, large down day today. I'm wondering if, that coincided with the Fed deciding not to do another rate hike. But again, let's just focus on the price action, focus on the highs, the liquidity pools, and just understand that because we've been in a downtrend, don't just assume, oh, well, let me find levels to just short off of and target this low. No, we ended a quarterly shift. We need to be open to a new quarterly shift perspective, which, could be right now in the next 20 days running buy side if it does want to go lower. So I guess that wasn't too specific on my projections on where we're going to go. But the takeaways for this video are keep these intervals in mind. Understand that we just reached a quarterly shift objective that ended a market maker sell model. It ended by taking the sell side liquidity on this daily time frame. And be ready to be flexible and kind of wait and see what the market wants to do. So I'll be watching these highs, and I'll be watching how we respect this PD array.